All right. Good afternoon, everyone. It is 12 o'clock here, and we're going to get started with this February edition of the Michigan First Mortgage Homebuyer webinar. And I want to thank you all for joining us today. And I know we'll have a few people that will be streaming in here shortly. So thank you again for being here. My name is Dan Sugg, and I am the Chief Mortgage Lending Officer for Michigan First Credit Union. My responsibility is everything mortgage, from the time you get pre-approved all the way through to making your payments. So certainly if you want to come see us at Mortgage, we're right behind the coffee shop in the Evergreen building in Lathrop Village. Today, though, I'm coming to you from our Grand Rapids market. We opened our newest retail location in Grand Rapids, in Plainfield, and certainly I'm excited to be out here and certainly grow our brand. The agenda for today is really bringing the topic of how much house can I afford? So when you're looking for that home, it really comes down to a lot of different things. And our experts today that you'll meet in a minute will be taking us through that for much of the call today and the things to consider. We'll end with some tips and tricks and hopefully closing remarks and some question and answer. But with that in mind, I want to make sure that you put your questions, if you have them, in the chat box. Keep your line muted as much as possible and make sure to keep your video off as a guest because that helps with our call performance. And today's call is being recorded. So if for some reason you want to come back and see any part of it, it will be on our website, along with all of the series that we've done over the years for our home buyer webinar. So without further ado, let's jump into our subject matter experts. On today's call is Michael Zuber. Michael is a loan officer for us here at Michigan First Mortgage, and Michael is going to tell us a little bit about what he brings to Michigan First Mortgage and offers all of the people that he interacts with, including our members. So Michael, welcome, and thank you for being here today.
Thanks, Dan. So I went to school at Ferris State University. I pretty much worked in the mortgage industry ever since then. I actually held a lot of leadership positions in operations before coming over to Michigan First as a loan officer. But lived in Michigan my entire life, and I've lived in Detroit since 2013. So definitely a local expert here. I love Detroit sports teams, avid Detroit Lions fan. I grew up playing sports, still play a lot of sports to this day, and recently got into making bagels, which I've been making for clients, partners, Michigan First branches, and actually, gotten a ton of referrals off the bagels.
Yeah, it's interesting, Michael. We were here at the grand opening today, and your bagels were a topic of conversation. Somebody actually approached me and said, "Hey, do you have a little officer that makes bagels?" I was like, "Yes, I do." So, but thank you for joining, and certainly appreciate you being here. Our real estate expert today is Taylor Johnson. Taylor, we are super excited to have you here. Taylor is from Keller Williams, and Taylor's going to take a few minutes and tell us a little bit about herself and what she brings Michigan First and our members. So Taylor, take it away.
Hi, everyone. As stated, my name is Taylor Johnson. I am a licensed real estate agent and broker associate at Keller Williams Advantage. I earned my bachelor's degree at Northern Michigan University in 2014. Since then, I went on to become a realtor in 2017 and earned my broker associate's designation in 2024. I am very passionate about what I do. I specialize in first-time home buyers. I value education throughout the process, commitment to knowledge about what's happening in the market, as well as professionalism and strong problem-solving skills because things can get complicated throughout the real estate transaction sometimes. Beyond real estate, I enjoy cooking plant-based meals and spending quality time with my family and friends.
Very cool. Thanks, Taylor, for joining. You mentioned specializing in first-time home buyers. Certainly, that is a very important part of what we do here at Michigan First Credit Union and Michigan First Mortgage. And just last year, almost $1.4 million in grant money. Our loan officers help our members facilitate that. And we are super proud of that. And certainly about 60% of our business is first-time home buyers. So let's jump right in. Why everybody's here today. And again, let me thank everybody for joining the call. We are here to really talk about what goes into how much house can I afford. That's probably the biggest fear everybody has as they're approaching a home purchase is, boy, can I afford that? I mean, is that really a reality that I can buy a home? So I'm going to start with Michael. Michael, when it comes to the financial side of the mortgage, what are the main factors that determine how much I can qualify for?
Yeah, so I mean, it's definitely a pretty loaded question, but really the main factors are going to be what is your income? What kind of assets do you have for a down payment? And then also your credit. So when we're talking credit, it's more than just your credit score. One of the really big factors, and may have heard this term, may not, but DTI ratio, debt to income ratio. This is something that we're going to do when you do an application. We're going to add up all of your debts, all of your monthly payments. We're talking auto loans, credit cards, student loans, even if they're on deferment, as well as the property taxes for the home that you're looking to purchase, your homeowner's insurance. We're going to add all those debts up, your monthly payments for all those debts, and we're going to divide that by your gross income. And it's just a very important thing to bring up because I think a lot of people think of their income when they're buying a home. But I would say like that debt to income ratio is really going to be one of the key drivers in figuring out what you can really qualify for.
And that all really centers around the actual payment, right? And a lot of people think about how much house can I afford? They think sales price. And that really is probably 3 or 4 in the calculation. Like you really got to start with what your current debt is and what you can afford in a payment. Really, the question maybe should be how much payment can I afford to start? And I really love the way you organize that out. So if I think about that in terms, Taylor, of a real estate transaction, there's a lot that goes into it, but how competitive is the market today? And how does that impact my budget or the offers that I'm going to make? Like if it's going crazy, how do I even figure that all out from a real estate perspective?
Well, I think it's great to start off with what defines competitiveness in the real estate market. And that is gauged by the months of supply. And what that means is how many months will it take for to sell the homes that are currently on the market? So in a buyer's market, it may take 6 or more months. In a balanced market, it can take 4 to 6 months. And in a seller's market, it can take less than 4 months. Just in January, we had in Wayne County just over 2.5 months of inventory. So this indicates that this is still very much so a seller's market and that buyers need to come into the process strategic. One of the advantages as we talk about budgeting and writing offers will be to shop below your pre-approved amount. This could be a smart move because it keeps you within budget while also allowing you that flexibility to make competitive offers when needed. Most sellers are still receiving multiple offers on their properties, and homes are selling at, on average, 98% of their list price. So there's not all the time this wide range of opportunity to offer below asking, even still when we're hearing, news reports that inventory is increasing, but increasing in relation to what? So understanding what market we are in and what that supply of inventory looks like gives you a better understanding of, are we still in a seller's market or not?
Yeah, I tell the loan officers all the time, my grandfather was very famous for quotes. At least if you listen to me, he was, but he used to have a thing, he said, half of nothing is nothing, right? So inventories are increasing, so there's more homes on the market, but certainly not where they need to be. So you said it was 2.5 months?
Yes, for
Yeah,
Wayne
so
County.
yeah, and that should be really, to be a healthy market, should be closer to 6. If you look at all the statistics over time, really should have 6 months supply of homes on the market. So very good, I think, representation of where it is truly a seller's market, which really plays into the fact of why we have these calls. We want our members to be prepared to do the work of home ownership before you become a homeowner. And then when you work with Taylor, you'll certainly be ready to go and make your offer. So back to Michael. So we heard now really the factors in what I should be talking about or working on to afford a home. What are some of the tips that you can help me with that increase my buying power? So when Taylor starts shows me homes and they're more expensive than I anticipated, how do I help my buying power?
Yeah, I mean, I think one of the biggest things is if you are thinking about buying a house and maybe buying a car, buy the house first. I mean, I think like one of the biggest things that I see is just folks a car payment is generally going to be one of your biggest debts. So a lot of folks, they've financed a new vehicle. I mean, we are in the Motor City. But if you're in that boat where you're like, oh man, I kind of want to buy a new car, I kind of want to buy a new house, buy the house first, figure out what you can afford as far as the car payment goes, because I see that as like a really big factor in limiting people's buying power. Other things that we might ask you to do when you're in the process is like, looking at all your credit cards. If you're one of those folks that has the Home Depot card, the TJ Maxx card, the Old Navy card, Amazon card, maybe paying some of those balances off, all of those different debts can add up, all those monthly payments. And then like the last tip I really have, and I wanted to plug some of those DPA or down payment assistance programs. Look into those down payment assistance programs. Oftentimes, they're going to have, maybe even more strict rules than just getting a mortgage to qualify for. But, we work with MISHDA, which is through the state of Michigan, on a $10,000 down payment assistance program. A lot of that is centered around first-time home buyers, and really excited to announce that we are participating with them in a $25,000 grant program to first-generation home buyers. Now, this is, as long as your parents haven't owned a house in the last 3 years, this is something you could qualify for. So, like, those are just some different tips that you can have to, increase your buying power.
Yeah, there is several of them out there, and I think a great resource is meeting with Michael and Taylor to learn even more about those. But to Michael's point, a lot of those are targeted to career or to income or to certainly certain parts of the market. So being informed and focused on where you want to buy and certainly looking can help increase that. There's another one too, Michael, and I'm sure there's small, but I heard today that we closed the Bristol rate was actually in 4s. So they have a buy down function with Michigan now that there wasn't so much down payment money, but it helped reduce the rate to lower the payment quite a bit to get into a home. So certainly pretty overwhelming for somebody that doesn't do it for a living, but I think is getting the word out. Go ahead, Taylor. You were going to say something?
No, I love the fact that you all are mentioning these. I also act as a HUD certified housing counselor with Amandala Community Development Corp. And this is a HUD approved agency where we offer the home buyer education class that participants can partake in. And we've gotten so many calls just yesterday when they officially launched that $25,000 first generation program. So I'm excited to see how many homeowners that's going to bring to the market.
Yeah, it is. We held an internal class on a team learning day we had recently for the team members here, and it was called "So You Want to Be a Homeowner," and it really, we covered DPA, and I was surprised about the interest in all the different ones that are out there today. So look for that in our webinar series. It's in there a bunch of different times, but certainly we'll continue to do those. So, all right, Taylor. So we talked about a couple of different things with Michael now, but so let's say I got pre-approved. So based on that pre-approval, what price range? I know you touched on this briefly, but how should I stay within that? Because I hear about bidding houses up all the time. So how do I stay focused to stay within my budget from a real estate perspective?
So understand that your pre-approval gives us, as your team, a strong starting point to help determine what's the best price range for your budget. But we'll need to factor in things like your monthly mortgage payment, which will include the principal, the interest, the property taxes, the insurance, and in some cases, your homeowners association fees. So instead of focusing on what you're pre-approved for, is kind of some of the points that you two have already touched on, Dan and Michael, that we should focus around. Consider how much of your net monthly income can you afford to expend on a monthly payment, and then reverse engineer that into what a purchase price will look like for you. That's going to be one of the best approaches as it pertains to ensuring that yes, we're still within budget. And then if we, find ourselves working outside of that, you have a better gauge in terms of how much more could that be in some cases. So I'm going to come back to just keeping it focused on that monthly payment.
Yeah. And again, that's another area where a DPA assistance could help you go above your budget to get you back into your budget using some of that money, whether it be a grant or a gift in some areas. So Michael, flinging back to mortgage real quick. So how much money do I need to save? I hear this all the time. Like I need to have X amount saved before I can buy my house. So is there a general rule of thumb, or can you give us some advice on what that could be?
Yeah, so I mean, there are some general rules of thumb. So, there are some different programs you may hear of, like a conventional loan program The general down payment for that is going to be 5%. There are some programs that you can go as low as 3%. FHA requires 3.5% down payment. So that would be, take the purchase price, multiply it by that percentage. That's your down payment. But then you got to factor in some closing costs that are going to be associated with the loan. You're going to have to think about, you're going to need money for the earnest money deposit up front. You're going to need to get inspections done on the house. Likely going to have to pay for the appraisal up front as well. So like I would say you'd probably want to focus on having at least somewhere between 7% of the purchase price. I mean, it's really hard to put a number on, but there are some other costs that are going to be associated with the loan, like tax prorations. In Michigan, taxes are paid in advance. So often one of your biggest costs at the end of the day is actually going to be paying the seller back for the taxes that they paid up front. So, there's a lot of different factors involved. And I think some other, uncommon things to think about is, it's like, okay, great. I have all this money. I've got enough. I have just enough to cover the down payment and the closing costs. Well, when you own a house versus renting a house, problems just happen. We just purchased a house in October and, just different issues happen month to month. And you got to have some extra money aside in order to, fix those problems. So you're not, constantly living with them.
Stuff can and will break. That's what I tell people all the time. It happens, and you have to be prepared for that, certainly. I think a good rule of thumb for me is you should have a couple of months' salary in the bank as a rainy day. I know that's harder for some than others, but certainly should be a goal of everyone because you just don't know what's going to happen. Set aside, and even if you just set a little bit aside each time, that will grow for you too. So great advice. So Taylor, we just talked about how much money you need. What are some of the hidden costs? I know Michael touched a little bit on them, but what else am I going to have to be ready for? I remember when I bought my first home, it felt like all I did was just give everyone my money and I had nothing left. So when I got all done, I didn't even know where it went. So talk to a little bit about that feeling.
Yeah. So there are some costs that can surprise buyers coming into it. One can be an extensive inspection period. A general inspection in some cases can cost a minimum of $350 and range up to maybe $500. But let's say you want to get a sewer line scope completed, a radon test, mold inspection, water test, air quality test. Occasionally people want to further investigate certain systems and services that the property has. Those additional safeguards can come at a cost. Other things can be your homeowner's insurance. Depending upon where the property is located and as well as even your credit score, may get you a higher quote than what you were initially budgeting for. So that might be some additional money out of pocket. Other things can be as simple as the moving costs. Are you going to hire professional movers? Do you need materials, packaging supplies, and tools to, get you to your next step? Ongoing costs, you two have definitely hit the nail on the head there with maintenance and repairs, even higher utility bills if you upgraded in square footage and space, appliance, lawn care. So that kind of list of, okay, now I have my home, what are things to expect can run pretty long sometimes too. And then lastly, increasing property taxes. It's really important to know that after the first year of you purchasing your home, the city, township, village that your property is located in, they're going to reassess that tax at the new sales price. And if values have significantly increased from the time that the previous owner has had that house, that can really surprise people. So real estate agents are able to estimate what that anticipated tax bill may look like. You can also reach out to the assessor office and let them know what your sales price was, and they may be able to put together an estimate for you as well too. So I definitely agree with having an emergency fund set up, or just 2 to 3 months of, at least 3 months of a rainy day fund too.
Yeah. Taylor, you got it right. You got it right. I've been doing this for a while. I'm almost 3 years in this homebuyer webinar series, and you're the first realtor to bring up the change in the taxes. That's something that a lot of people don't think about. I'm old, so I remember the Headley tax amendment here in Michigan when that place that really froze that the tax on a home, the longer you owned it, your tax were they were set to go up so much each year. And if you had a change in value after so many years, the taxes in some cases can double. So you definitely got to be ready for that. Certainly, in that. And you also touched on a point, and I only do this because I've heard it a couple of times now. If you're buying an existing home, which most first-time home buyers do, they buy an existing home in a starter neighborhood. Look around. If you see a lot of mature trees, realize that those trees have roots and those roots grow in drains. And your home will flood if you have a clogged drain. That's how that works. It backs up into the home. So if you want to spend that extra 100 or $150 to have the sewer scope, and you think there's a need, do it, because ultimately that could be something you could deal with during the sale versus 6 months after you close, and now you have sewage in your back in your basement, depending on what municipality you live in. So great points there. Michael, what are some of the key drivers that prevent people from qualifying from a home? What are the pitfalls I should look for when I'm getting ready to get pre-qualified?
Yeah, and I mean, I kind of touched on this before, but really a lot of it is just, I think the two major humps are having the funds saved for the down payment, the closing costs, and then the other thing is just limiting the amount of debts you have. Like we kind of went into it a bit, the car payment being a big one. Other things that I've ran into too are just, maybe you have a property from like an ex-spouse that's still in your name, or, something like that, because, even if it's vacant land, taxes, insurance, anything that like you have on any existing properties that you own, those can be, those are going to be factored into your debt to income ratio, and those could prevent you from buying, or limiting just what your buying power is. So like, those are really like the two major factors you have, that really prevent people from buying. And that's why I think the down payment assistance programs are so helpful, because like, a lot of these programs, like you're going to be getting a grant to buy the house. The grant is actually going to be due back to the issuer when you go to sell your house. And the reason for it is just, you need to have a certain amount of money in order to qualify for, buying the house in general. When you go to sell your house, you do that transfer or refinance, you have to pay that money back to the issuer so that they can go ahead and then give those funds to someone else who's in that same situation that you were once in.
And it's certainly never too soon to speak to both Taylor and Michael. I'm a first-time home buyer, and I don't think I'm ready today, but in October, I want to start looking for a house. Now is the time, right? I mean, there's no rules against that. Certainly, you may have to requalify on your credit at some point in case your debts have changed, but you have a long runway. There's no rule that says you have to buy the house next week just because you got pre-approved. You certainly can get that done. And Taylor, is it ever too soon to start looking for a house?
I would say no. And I mean, coming to what some of my points are, that was number one, actually, as far as being prepared and doing your research. First thing is learn about the down payment assistance or closing cost programs that may exist and be available to you. Even if you're 6 months out, a year out from what you anticipate buying a home, connect and meet with a real estate professional. Start learning about what's happening in the market. I set people up on monthly searches all of the time, just so we could keep an eye out to catch trends of what we're noticing in the market, from price points to just inventory availability. And great point as far as just connecting with the loan officer. Now, the sooner that you are more prepared, the less stress you are coming into this process, because there are, just in this conversation, you're learning about so much. So when you give yourself some time, you kind of can digest things a little bit more. You can ask more questions and just get the support that you need so that you feel empowered and confident when it's time for you to start shopping for your home.
Yeah, and it's super important, I think, to match, whether it be a loan officer or realtor, with somebody that you can connect with. You can feel like you're mutually connected and can understand the cadence of communication. But certainly, getting comfortable in this process is hard to do for somebody that's never done it before. I tell the story all the time that when I bought my second home after I was in the business, knew what I was doing, I was still super nervous going into it because it's a lot of money, and it certainly and a lot of things can happen along the way that's not in your control. And certainly having two experts like Michael and Taylor on your side certainly helps it. And these guys are there to help you, whether you're looking to buy today or next year or even the year after. We've had stories where members looked for homes for 3 years before they certainly found the one that was right for them. But Well, we've talked ourselves right to the end of the hour again, so I appreciate you both joining today. I do want to make sure that your points are taken away by our members. Like I said, this call is recorded, but these are the things that our experts feel, our subject matter expert feel that you should take away from this. So I will start, because I started with Michael first, I'll start with Taylor here. So Taylor, tell me, what are the three things our members should take away?
So the first point that I have for you all, after you purchase your home, to still plan a budget for 1 to 3% of the value of your homes for repairs and maintenance. That's probably one of the biggest adjustments that someone who has been renting a home for some time now is getting better acclimated to, is the fact that they're the landlord now. So they have to have proper measures in place and be financially prepared. You want to be very careful of additional financing options. You don't want to finance yourself out of your home. You can lean in on home warranties. Make sure you have adequate homeowners insurance coverage and things of that nature. So when major things do come up, you may be able to use those policies as resources to support you in that cost. And I mean, that essentially leads me to my next point. Shop your homeowner's insurance policy once a year, just to ensure that you're getting the best rate and coverage. As a homeowner, that is the one factor of your mortgage payment that you do have some influence over. And that is being sure that you're getting the best rate as well as adequate coverage. Sometimes people step into it where they weren't able to get the coverage that they anticipated or wanted, and now they're better financially able to improve their coverage for their home. And the last thing is, inventory is still low, regardless of what you're hearing out there. So be prepared to compete with a strong offer the first time around, and trust your real estate professional to lead you through that process.
Yeah, and I've seen that firsthand. And it's very important that your realtor, I'm sure like Taylor, is there to negotiate on your behalf and present that offer. And that usually, if you're going to win it, you're going to win it on the first offer. So I appreciate those points. And then Michael, your three. Actually, you have four today, so I'll give you four.
Yeah. So, I mean, a lot of this, like, I'm going to sound like a broken record, but really just kind of reiterating the same points I said I'll call, but it's, your income, your savings, your credit score, your monthly debt obligations, they all play a critical role in what you're going to qualify for. And to piggyback on like what Dan was saying in like the last topic, it's never too soon to get with a loan officer. This is a free consultation. We are going to help you for free up until, you close the loan. And these things to get qualified, I mean, sometimes they take time. If your credit scores not where it needs to be, it can take 3 to 6 months to get it up to the right spot. Saving money, I mean, I think we all know it's tough to save, especially where we're at in the economy. And then I think it's better just to know like what you need to do to have that coach behind you, as far as like, what do I need to do to get the house that I'm looking for? I really try to partner with all my clients, and like, I think something that's been great is, even if someone isn't qualified for, like, I'm giving them takeaways on what they need to do to succeed, which is really one of my favorite parts of the job. But, like I was saying, to reiterate, disqualifying home buyers, really a lot of it just comes down to getting over that hump, to have enough funds for the down payment, the closing costs, and then, that debt to income ratio, having a lot of debts, especially if you have it spread out amongst a bunch of credit cards, student loan debt, high car payments. Those are tough things to overcome, and it's just not, think about it. It's not just having that 3%, the 5%, the 3.5% saved for the down payment. It's all the factors. It's the homeowners insurance increasing, the taxes increasing, all things like that. And pre-approval letter, that's going to be something that when you do qualify for a home, that's something we're going to issue you, so you know what you're qualified for, so you can take that to Taylor and say, hey, Taylor, Michael says I'm pre-approved for 300,000. Let's look at houses, and that's going to help her, do that search for you.
Yeah, certainly. And asking all those questions are certainly important too. So thank you both today. For our guests on the line, I did see a quick thing in the chat that said they could ask questions. We're actually out of time, but Michael will reach directly out to you if you have a question. So please put it in the chat right now while I'm finishing up here, or we can just reach out to you after the call. For information about the webinar series itself, you can email info@michiganfirstmortgage.com and we'll be able to answer your questions there. If you'd like to inquire about a mortgage or apply, we can have direct links at michiganfirst.com/mortgage. We have 40 loan officers there to choose from. Certainly you can call and get a hold of those same people, 800-664-3828 at our 365 Live Center and go through a qualified loan officer, but also directly with Michael Zuber. So Michael's on the call today to take his time. His direct information is there along with his email address. Certainly you can reach out to him. And if you want to make a quick snip of the page while I'm talking here. And then for Taylor Johnson, you can reach her at her phone number there or at www.youragentaylor.kw.com or info@youragentaylor.com. She'll happily get back to you there. So we do have a insurance company, Michigan First Insurance Agency. So talking to Taylor about annually quoting your insurance. I think you guys both mentioned it today. We carry over 40 different insurance carriers there that you can certainly shop around. And it is always, I think, intimidating to shop your insurance, but they try to make it as easy as possible there. So please visit michiganfirst.com/insurance for more information. And then lastly, thank you, Taylor. Thank you, Michael, for your expertise today and certainly joining and taking the time out of your busy schedules. And thank you all for joining us on our webinar series. We'll be back next month and have a great rest of the day. Stay warm and hopefully spring will be here soon. Thanks, guys.
Thanks, Dan.
All right, bye-bye.
Thank you.
Thanks, everyone.